Recently, I received the following question. Is there a difference between annuitization and settlement, and how are the two related? Now, just a little bit by way of background. At its most basic level, an annuity is a type of contract offered by an insurance company. Now, in theory, it differs from a life insurance policy in that the two have different purposes. Life insurance is designed and funded to provide a payout to a beneficiary after an insured person's death. On the other hand, an annuity is funded and intended to provide an annuitant with a payout while he or she is still alive. For both contracts, and predictably, funding comes first and the payout comes second. But with life insurance, the event that triggers the payout is obvious to us. It's a familiar, if unfortunate, part of everyday life. Namely, it's the death of the insured person. But what is it that triggers the payout in an annuity situation? What marks the transition between the funding, or the pay-in period, and the output, or the payout period? And the answer is that for many annuities, and all deferred annuities, the transition is marked by a decision on the part of the annuity owner. That decision, and the ensuing and surrounding event, is referred to variously as annuitization or as settlement. As a first approximation, we could think of the annuity owner's choice by saying that the owner has decided to settle the annuity. And if we think of settlement as the annuity owner's decision, then it's natural to think of annuitization as the insurance company carrying out the annuity owner's instructions. In other words, it's the process that has to be carried out by the insurance company in order to execute the owner's decision. At some point in time, the annuity owner decides that he or she wants to stop funding the annuity and start to receive a payout from it instead. When the owner reaches this point, he or she elects a settlement option, and then the insurance company annuitizes the contract in order to take that lump sum that was present in the annuity and spread it out into payments. And this might shed some light on the situation. However, just saying annuitization follows the owner's decision to settle arguably leaves something out. Namely, the owner will typically make a settlement decision and select between various settlement options based in part on projections about what annuitization would look like. So a second way to get further clarity on the situation is to look at the words themselves. An annuity is in part a financial instrument. Therefore, annuitization is a financial term. It's an accounting or actuarial term for taking a lump sum and spreading it out into installment payments over time. In this way, it's a close cousin to other similar financial terms. For example, amortization, which in some contexts at least is a word for taking a debt or loan and spreading it out into installment payments over time. Or, in other contexts, capitalization, which on a business ledger is a word for taking an expense and spreading its impact out over time. So reflecting on the financial orientation of the word annuitization helps us to see that annuitizing is in the first place a particular kind of mathematical calculation. It's not as if the insurance company is simply taking your current annuity value and dividing it arbitrarily by some number of years. The calculation will take stock of your principal, of some kind of a rate of interest. It's going to take stock of your longevity estimates, as well as something that is often referred to as a mortality credit. It's a complex calculation. But at the same time, an annuity is more than just a financial product. It's also a legal contract. And the decision to transform your lump sum into a series of installment payments, according to the math dictated by the annuitization calculation, is a weighty and irrevocable decision. And we can grasp something of this when we consider that the word settlement often shows up in other contexts in matters of law. And it's often applied to dispute resolution scenarios. And in that case, it would involve two parties reaching a mutually agreeable decision before the matter has to go all the way to a judge. And remember, an annuity is a contract. Therefore, to have any change in the contract is going to require the agreement of both parties. Hence, the contract needs to be settled. Here's a quick example to try to tie these strands together. Suppose John has a deferred annuity with Acme Insurance Company, and it's still in its pay-in period. Let's suppose the current annuity value is $100,000. But John is in retirement now, and he would like to start receiving an income payment from his annuity. In other words, he wants to go from having an accumulation vehicle to a decumulation vehicle. He wants to go from the pay-in period to a payout period. So he calls his agent, Jane. Behind the scenes, Jane generates an illustration of what such a payout structure would look like. Now, Jane is either interacting with actuaries at her company directly, or more likely, she's using a software package that has the relevant calculations already built into it. And after the relevant numbers are crunched, Jane informs John that if he were to annuitize his contract, he'd get $6,000 a year. And since it's a lifetime annuity in this case, that would be for the rest of his life. Now, John considers the matter and ultimately accepts the offer. But remember, since the original annuity is a contract, no change can be made without signing something. Therefore, Jane produces a settlement agreement, and both she and John sign, Jane on behalf of Acme, and John for himself. Acme is then authorized to perform the annuitization according to the calculation that John was shown. And John enters his annuity payout period and begins receiving $6,000 a year, if monthly, $500 a month. So annuitization and settlement are two words that don't mean precisely the same thing, but both apply to the same event, so to speak. Think about how the words triangular and trilateral can both be used to describe triangles. But triangular, the word, means having three angles, and trilateral means having three sides. So they're not synonyms. Similarly, settlement and annuity are not synonyms. Annuitize is a financial, mathematical term that has to do with taking a lump sum and converting it into installment payments. On the other hand, settlement is a legal term that has to do with accepting those installment payments as a fair exchange for the lump sum. So even though the two words don't mean precisely the same thing, both annuitization and settlement generally designate that transition between an annuity's pay-in period and its payout period. As I've said in other places, annuities can be very tricky, and in this video I have skipped over quite a lot of detail. So to try to fill in some of that detail and to round the discussion out, I invite you to see some of the earlier videos that I've done, as well as to check back in for forthcoming content. But if you found something of use in this video, I ask that you like it. If you would like to see additional content, I invite you to subscribe to the channel, and if you click the notification bell, you'll be alerted to that content as it becomes available. Either way, I thank you so much for joining me today, and I look forward to seeing you again in another video. Thank you so much.